These are the stories rocking the crypto market and beyond this week. Bitcoin adoption is increasing. Fantom has made a comeback, Uniswap updates, and some crazy macro news from Australia to what Elon Musk has to say about the recession and rate hikes. Let's get it. First, let's talk about Bitcoin, which is seeing adoption increasing despite a basically market-wide capitulation event that we've seen recently. Bitcoin has just seen its fourth largest capitulation event in its history due to the FTX collapse. According to this chart from Glassnode, Bitcoin has seen a realized loss of $10 billion in just 7 days. This is 4 times larger than the peak in December 2018, and this is 2.2 times larger than March 2020. In fact, all 4 of the biggest capitulation events have happened in just the past 2 years over 2021 and 2022. But the question is, who's still selling? Because despite everything that's happened during the bear market, adoption continues to grow. Bitcoin addresses holding at least 1 or more Bitcoin have actually hit a new high of 950,000 addresses, getting close to 1 million now. This is no surprise given the number of Bitcoin being removed from centralized exchanges, of course, in favor of self-custody after we did see that terrible collapse at FTX. Both Bitcoin mining revenue also at its lowest in 2 years. We are seeing miners now being forced to capitulate as well and having to sell their Bitcoin. Bitcoin miners have been selling at the fastest rate since early 2016. And if the Bitcoin price doesn't go up again sometime soon, we're going to start seeing more miners cashing out and going out of business. Over the last month, whales have released 7,000 Bitcoins back into the wild, but those owning 0.1 to 10 Bitcoin have accumulated 192,000 coins, and those owning less than 1 Bitcoin have accumulated 96,000 coins. Now this means we are right in the middle of a massive redistribution of wealth in Bitcoin. Many investors right at this moment are going to become whole coiners during this bear market. The prices have come down enough, it's finally able to afford a Bitcoin for a regular person. And of course, this is all happening at the same time that we see this huge news out of Brazil this week that they approved a regulatory framework that recognizes Bitcoin as a form of payment and as an investment asset. The country is just one step away from this becoming a law. It just needs the president's signature across it. This is a big deal for Bitcoin, a big deal for Brazil, and it's just huge positive news for crypto overall, and certainly progress in terms of global adoption. It doesn't mean that Bitcoin is going to be accepted as legal tender in Brazil, just as a legal form of payment in Brazil. Looks like lawmakers need to take a little bit more advice from El Salvador to go that next step, but this is great news anyway. Now let's venture into the altcoin jungle, my friends, and talk about Fantom. The return of developer Andre Krohn to Fantom sent the Fantom price soaring up 24% on the news back a few weeks ago. And now Andre is spilling the beans on how DeFi saved the blockchain. Andre has revealed all their assets and income in details in a recent blog post in which he makes a very bold statement that Fantom now has 30 years of runway. That's how much cash they have, and they won't have to sell a single Fantom token to reach that 30-year mark. Andre documents that back in February 2022, Fantom had about $4 million in assets and was actually bleeding money. The company started then participating in different DeFi stuff, doing yield farming on Compound and on synthetics. That then increased their treasury to over $39 million. And by the end of 2021, they had $1.5 billion on hand. Now, the Fantom Foundation is cash positive with $340 million worth of assets and annual earnings of over $10 million. He said that if DeFi didn't exist, Fantom would likely not be operational today. And I believe the same is true for many companies out there. Pretty crazy stuff. Next, let's talk about Uniswap. The world's biggest decentralized exchange by a long shot has just made a new major announcement. Uniswap has launched NFTs on its native protocol. Nice. The NFT marketplace aggregator will initially allow users to browse NFT collections on different platforms, including OpenSea, LooksRare, XY2Y, SudoSwap, Larva Labs, NFT20, and NFT X. Developers claim the new feature can help users actually save up to 15% on gas fees compared to other NFT aggregators, which is a good value proposition, right? Uniswap is also offering gas rebates to the first 22,000 NFT users and an airdrop to anyone who had used the Genie NFT platform previously. And I know everyone thinks that NFTs are dead, but they're not. NFTs are not dead, far from it, in fact. And to see the biggest decentralized exchange making these kinds of moves, these kinds of integrations, makes me very bullish on the future of NFTs. Now, if only the Uni token didn't suck balls and have no use case. Maybe one day, maybe one day. Now, before we dig into the macro news, just a reminder that if you don't have an account on Bybit yet, then you need to get yourself one. It is the best exchange for trading crypto. It has 0% spot market fees. And if you use that link down below in the description, you'll be able to claim up to $30,000 in deposit bonuses. So check it out and find out why over 10 million traders do their trading on Bybit. Now let's talk about the macro news. Elon Musk is out there urging the Federal Reserve to cut interest rates. Okay, Elon, I'm sure Jerome Powell gives zero ducks about what Elon Musk thinks, but Elon Musk is concerned that the US Federal Reserve is going to overdo it with the interest rate increases and then send the economy into a recession. In a tweet, he urged the US Federal Reserve to cut interest rates immediately. They are massively amplifying the probability of a severe recession. And Elon Musk is not alone in this perspective. We are seeing other big investors saying a similar thing, people like Cathie Wood. They've also sounded the alarm on this increased probability of economic chaos, even more than we already have because of the interest rate hikes. And that is a reason to back off those rate hikes. And this isn't the first time that Elon has been vocal about the prospects of a major global recession. Just a month ago, he tweeted that he estimates a global recession could last until the spring of 2024, right around the Bitcoin halving. Fascinating. And while it doesn't look like the Fed is going to cut interest rates just yet, they have at least signaled a slowdown in interest rates, which is positive. This week, Fed Chair Jerome Powell said smaller interest rate hikes could start in December. The markets were already pricing in a 65% chance of a 50 basis point increase in December, which is down from the previous 75 basis point increases, and that probability just increased to 77%. And as a result, the fabled Santa Claus rally could be here a little bit early. Bitcoin broke over $17,000 this week. The S&P 500 jumped 3% on that news. And finally for today, Australia estimates that digital assets could increase its GDP by up to 40 billion Australian dollars a year with the right regulatory framework. That's a big number, man. In a recent digital assets report, which was commissioned by the Tech Council of Australia and written by Accenture, it outlines the benefits of digital assets for the economy. The report estimates that the digital assets industry, cryptocurrencies, stablecoins, and yes, CBDCs, could deliver an 80% reduction in payment costs by 2030. And this is all they're looking at, this kind of stuff, right? Saving Australian businesses 200 million hours per year. Massive. And it also has the potential for customers to save almost 4 billion Australian dollars per year, or around 160 Australian dollars per person, as you can see in this chart here. What's concerning about all this is, of course, the progress of Australia's CBDC program. Its pilot is already underway and expected to be completed in the first half of 2023. And yes, yikes, CBDCs are scary. Bitcoin, not CBDCs, Australia. Come on, guys. Come on. Okay, that's it. Subscribe now. See you next time.